Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
You're watching us here on Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Ekta as well as Nigel. Good morning, guys.
Well, good morning, Mangalam. Good morning, Ekta. And, it's a new look Bazaar that we have today. It's not just a new look Bazaar. It's a very, very important day. All through the day, we're going to be getting treats and good wishes for my brother, Mangalam. Wishing you a very, very happy birthday, Mangalam. Good luck, prosperity, happiness, everything that you choose and wish for, I wish it for you, brother.
Thank you so much, Nigel.
Happy birthday, Mangalam.
Well,
this is going to be a long day for you, considering that it's going to be back-to-back shows. But we do have a lot of news on your birthday as well.
Well, as you say, when you're playing, it doesn't feel like you're working, and that's all we need, right? With team members like you all, it's so much more fun. It's added to all of that. You said all the good wishes, this, that, and Nigel, just 3 words. Get richer, fitter, smarter. That's it. That's all we need. And that's all, I guess, we wish for everyone as well.
Well, that's right, Mangalam. And you've been following the template as well. So good on you, mate. Wishing you a good day, a good year ahead. And let's get straight to the market action.
All right, let's get straight to the market action, though. If you look at the Wall Street overnight, there was snapping of a 7-day rally that we saw on the S&P 500. So if you look at all the frontline indices, they saw a bit of a decline. What was interesting is that we also saw a bit of a decline, a little more on the broader market. So the Russell was down by over 1%, and thereafter we saw the CBOE Wix rise by about 5.3% as well. 2 things I'm watching out for from the US market standpoint. After a big rally that we've seen, some bit of profit taking, one would say that, okay, that's no concern. But a couple of things. Oracle, that one was down about 2.5% in yesterday's trading session. Reports of them, actually losing some money, or the cloud business being margin dilutive or lower than analyst estimates, has the street worried a little more about the AI valuations. Remember, we've seen a big rise in all AI-related stocks. So is this a start of, the street questioning the AI rally or not, is something that I'll be watching out for. The second part is there was a fair amount of excitement in the previous trading session ahead of Tesla's reported new launch. And then that turned out to be a bit of a, weaker than expected sort of launch, because they've announced a lower priced entry-level variant. And as a result of which, Tesla was down about 5.5% in yesterday's trading session as well. So those are a couple of things I'll be watching out for from the US market standpoint. If you look at, some of the near-term triggers that we have, you have the US Fed minutes that will be revealed today. So that's something we will track. And ahead of that, all the US macros, they're by and large stable. Yes, there has been a mild spike, so to say, in the US dollar index, but nothing really to complain about. The big story of the morning is gold. That's crossed $4,000 per ounce for the first time ever. So that's something we will most definitely keep, watching, as there is some risk-off which is taking place in the equity markets after a 7-day rally on the US. Can that mean that higher gold prices would come by? You have a lot of investors now calling, Ray Dalio, etc., were calling for higher prices on gold. So whether that sustains or not is something we'll be watching out for. But out here in India, we have the crude oil prices, which are fairly benign. The Asian markets are doing a lot better. The Japanese index, the one which is trading right now, the others, mildly lower, nothing really to complain about. And the Nifty yesterday did okay-ish. There was a tug-of-war for, yes, the expiry-related factors led it to move around the 25,100 mark within a 100-point range from 25,080 to 25,200. I'll be very interested to see how the IT index performs today and how Reliance performs today. The Nifty has been led by Nifty Bank, but Reliance is at a very crucial zone. Yesterday's close was 1385, the 20-day moving average 1386, and the 50-day moving average 1387. So in absence of performance coming in from the IT pack and outperformance coming in from the Nifty Bank, can Reliance power the next move of the Nifty or not, is the big question that we'll be tracking in our local markets. The GIFT Nifty, for starters, comes up for you after a weakest start that we saw on Wall Street yesterday. The GIFT Nifty indicates a flattest start that we have out here. But yesterday's volatility, a lot of it on account of the F&O expiry. Does that continue into this week or not? Let's go across to Nigel. Nigel.
Well, that's right, Manglam. Yesterday actually was a good trading session, but just towards the end, the final 60 minutes or so, we saw the weekly expiry factor that did play out, and that's why the Nifty towards the end of trade, in fact, the last tick was closer to the low point of the day. So that's what troubled the Nifty yesterday. But otherwise, there are a couple of positives. We pointed this out yesterday. That the FIs from being net sellers of around 2,500 crores, it came down to around 1,500 crores. Then the net sell number came out to around 500 crores. And guess what? Now, in fact, that's U-turned. Now they're buyers to the tune of close to around 1,400 crores or thereabouts. So good sign out there. The FIs have turned net buyers. You'll say the element out there could be of these large trades, but yet them turning buyers is extremely good news. On the flip side, you have the DIs as well that continue to show the money. Yesterday, relatively less, but institutions were net buyers to the tune of close to around 2,000 crores. Good news out there. And the screen was telling you there's a bit of a short covering bounce that's playing out. And that's precisely the way it moved yesterday, because the Nifty and the Nifty Bank, both of them ended higher. And the open interest was lower on both of them. And by the end of the trade, well, the FIs, they went ahead. And for the first time in a while, they went ahead and they covered some shorts. 8,000 contracts is what they covered. 93% of their positions still on the short side. So this market is still pretty much net short. And that's the way it played out in trade yesterday. Moving to the options data, well, now all eyes on the 25,200 call. Good amount of open interest build up out there. The premium around 100 rupees. So that's telling you 25,300 will be the next level that the bears will want to defend. While on the downside, the 25,000 put continues to see a good amount of writing. Now, plugging in the options data, plugging in the the data points that we have, the technical factors as well. Yesterday's high will be crucial. You'll want the Nifty to try to get past yesterday's high because on the day-to-day basis, it's been making higher highs. If that trend needs to continue, we'll need to take out this mark. So that's going to be the important resistance mark just for today's session. And on the downside, since there is writing being seen at around the 25,000 odd mark, the previous trading session, we went to around 24,900. That's the first level of support that I'm looking at. The Nifty Bank is trading above all averages, the simple moving averages, 20, 50, 100, 200. First reference point will be around the 100 DMA. That's close to around 400 points away from current level. So that's, the first reference point that you have. A stock that I'm looking at is Vedanta today because there is that demerger hearing. The NCLT nod will be awaited out there. And we're talking about gold. Silver as well is seeing a bit of a melt up. And the only way to play silver is via Hindustan Zinc and in turn Vedanta. So Vedanta, midway through the trading session, we'll be getting that verdict with regard to the NCLT. So that's the stock that I track today.
Okay, all right, Nigel. Thanks very much for that. So that's a lot of the statistics as well as the cues that you have lined up for today's trading session. But on to equities. Rhythm Desai of Morgan Stanley says for their coverage universe, their analysts expect a low single-digit rise in profit and high single-digit revenue growth with numbers distorted by several one-offs. He says this quarter is likely to transition India into higher earnings growth given all the policy stimulus. He adds financials and energy have witnessed the highest positive earnings revisions in the past 3 months. He recommends lenders, consumer and industrial stocks going in to earnings season. All right, let's get in some global perspective now. We have Neeraj Seth, who's the founder and CIO at 3R Investment Management, joining in now. Neeraj, hi, welcome to the show. Well, I'm extremely tempted to start the conversation by asking you not about equities, but about gold, which is now at $4,000 an ounce. It's difficult to get your eye off the rates there. But now, do you think that it's probably getting a little oversold at these levels and maybe one should probably pull back? What's your view?
So I remain positive on gold. I don't think gold is going to lose its shine anytime soon. If you take a step back and think about what's happening in the world, the combination of geopolitical divide, the fiscal deficits that the governments are running in the developed world, the faith on the fiat currency. So gold is playing a role of a safe haven and an alternative currency in people's portfolio. And you do see that diversification element playing through the the central bank reserves across the globe. So you've seen the uptick in the central banks buying gold. You probably will see another wave as the retail obviously chases some of these rallies. So I wouldn't be stepping away from, in fact, involvement in gold. If anything, if I take a 12 to 18 month view, I think there's still upside because it's just changing the nature of what it plays in your portfolio.
Okay, all right. Hi, Neeraj. Good morning and good to see you. And so you're maintaining a positive bias on gold. I was looking at a couple of data points. The central banks have been buying, but the gold ETF buying actually has lagged. if I compare it, with regard to how much of tonnage they had a few years ago. So that could be another factor, a bit of left out feeling. From around 4,000 tons, I think it came down to around 3,300 tons in terms of gold ETF holding, which is now back to around 3,900 tons. Got that point. So that's about gold. The other point we had chatted about the last time around was the FIs could possibly turn the tide, and come back into the Indian markets. That seems to be playing out. Do you think towards the end of this year, we could see actually FIs turn net buyers in the Indian markets, going by the valuations, going by the underperformance, and going by the FI holding in the Indian markets itself is at record lows? Your take, Neeraj.
So I do think you will see an uptick. Now, there's some constraints. To be honest, you still have to see some clarity with regards to the tariff, the trade deal. And the second is you need to see a little more of momentum building up from an earnings perspective in India, which has been somewhat lackluster. And in addition to that, if you think from a global investor or global allocator of capital standpoint, you have seen a significant rally in China. You're seeing some major shifts in Japan. So there is certainly a competition for capital after a very long time for India that you're seeing on the equity market front. So the turn should be there, but would it be very significant in terms of the flows? I'm not yet sure, but certainly where the markets are in terms of valuation with some correction over the course of last 12 months, I do expect to see the turn here.
All right, you expect to see a turn here. What exactly do you think would cause that turn? Because, the fundamentals of other countries vis-a-vis their valuations are looking a lot better versus, say, something like in India, where fundamentals haven't yet caught up. So what is it that you think will cause this turn?
So two things. One, I do expect to see further turn in the monetary policy. And we had obviously this discussion last few times, RBI had moved to a neutral. I think RBI will ease further. So that's certainly more from a monetary condition standpoint. I do expect to see more in the next 6 to 12 months. And the second is with the GST reforms and expectation of further reforms, given the focus from the government on it to restore growth, you will start to see some of the initial signs of recovery from a consumption and capex perspective. So as I said, you do need to start seeing those signs for the turn in the flows to actually happen.
So what's the incremental EPS growth that you foresee in the second half of this year vis-a-vis the first half, which was a washout?
So I think it's still in the low to mid single digits is what I'm looking at. I don't think right now you have as much of an impulse, which is why you see the flows to be lackluster.
Neeraj, just quickly, there was some profit booking which took place in the US markets. There's this fear that there's this AI bubble which is building up. Is that taking place according to you? Is it the start of maybe some amount of profit booking there?
So I don't think it's a significant profit booking. If you look at where S&P is or the tech stocks are or the AI theme is in terms of performance, it has been stellar over the course of last few years. So small shifts overnight, I don't think really gives you much of a direction. The part that I do with some caution on is that there is some frothiness building when I look at across the news flow, the valuations, some of the vendor financing kind of structures showing up. I think there's a little bit of a frothiness building here in the US market on the AI theme. And it's more a question of, again, which companies really show the EPS growth in the next 12 to 24 months versus where it's just a narrative-based valuation. And I think there's some pressure that can come over the next few quarters.
There are various uncertainties, Neeraj, here among the tech names itself, but we have lagged the Nasdaq rally by a margin. Do you think there's a good case that Indian tech companies actually see some kind of bottom fishing at these levels, given the valuations, given the balance sheets, and given the kind of pessimism that's surrounded with regard to these companies? And that's why they have been under-owned. Do you think there's a case out there for the IT rally to actually start here in the Indian markets?
On the technicals, probably yes. On the fundamentals, I don't think so. I still believe the Indian IT services is stuck between the rock and the hard place. Between all the geopolitical divide, the issues around immigration, a number of factors, I still don't see a huge amount of respite coming through unless some of these issues get resolved. Or the companies actually have a pivot towards a business model which is less dependent on US or purely the exports aspect and has a stronger growth attached to it. So some bottom fishing is possible, but would I take a structural view to be positive here? I don't think so.
All right, Neeraj, thanks a lot for that. Appreciate your comments and wisdom on the market right now. You do believe there is a turn in the Indian markets. The second half of this year is where, there could be some sort of earnings uptick that would come by, but no hurry to sell gold right now. You're still fairly positive on it. Wish you a good day. With that, let's tell you what the interactions are that are lined up for the show. On the show today, we have at 8:35 the management of V-Mart Retail to discuss their second quarter business update, consumer sentiment. At 9 a.m., we have Gaurav Malhotra of Axis Capital to discuss key trends in the telecom sector. 9:20, Lawrence Polanco, CLSA, will be the market master of the day. At 9:35 a.m., the managements of J. Kumar Infra and Titagar Rail Systems join in as Cabinet approves 4 railway projects worth nearly 25,000 crores. And following that, Hetal Dalal of Institutional Services, Gopal Jain, who's a senior lawyer at Supreme Court, will be chatting with us at 9:45. As sources tell CNBC-TV18 that Home Minister Amit Shah and the Finance Minister Nirmala Sitharaman met Noel Tata and Chandra as tensions escalated at the Tata Group. Towards the end of the show, our special segment, It's the Economy. Tata speaks with Alok Mishra of Microfinance Industry Network and Jinay Gala of India Ratings Research on whether the MFI default issues have ebbed.
Well, time to slip into a quick break. We've got a lot of stock-specific action to track for you in our special Top 10 segment. For the time being, I'll run you through the list. Titan, Anand Raj, Lodha Developers, Concor, Ixigo, they'll all be reacting to positive news flow. Add to the risk, IRB Infra, Shelley Engineering, banks. While on the flip side, Tata Motors and Godrej Consumer could see some red. We'll explain all of this on the other side. Stay tuned.
Welcome back. Well, time now to drill down to specific stocks. Our research team is standing by with the CNBC-TV18 list of top stocks for the day. Well, Manglam, let's kick it off. Is Titan shining as brightly as you on your birthday?
Well, I suppose so. On that base, Titan's numbers aren't particularly bad. I'll tell you why. Because, domestic jewelry business has delivered a 19% growth. You would quibble about, why Kalyan has grown a lot faster, PN Gargil and all. They're all a lot slower base. The thing is that, surging gold prices have driven the substantial ticket sizes higher. But at the same time, the buyer growth has reduced year on year. That reduction has been only marginal. So that's a positive. Secondly, the second quarter had a high base last year because of the customs duty reduction that was announced in the budget. And that was offset by early onset of the festive season this time around. The other positive is studded jewelry. That grew in mid-teens. That outpaced the plain gold jewelry growth. So what explains the bigger growth here? It's gold coins. They continued their strong run because of the big surge that we've seen in gold prices. So investment via gold coins has been a newer trend. All the other categories as well have done okay-ish for Titan. So these numbers aren't particularly bad. In fact, I see some light green on the stock on the back of a near 19% growth, better than expected studded share. And going forward, you have the festive season ahead. There is Dhanteras, there is the wedding season. So these are, demands which is a lot more sticky than the gold prices.
Okay, all right, Manglam, thanks a lot for that. Well, let's stick to the Tata Group then. Sudarshan is joining in to tell us about Tata Motors. Morning, Sud.
Good morning, Nigel. So as expected, Tata Motors, basically JLR has released Q2 sales update, and those updates are very weak, but surprising parties and sales have looked much weaker than expectations. Wholesales have fallen by 24%, retails are down almost 17%, and that's courtesy recent cyber attack that company has faced in its UK facilities. And all the regions have seen a drop. UK was down 32%, North America has seen a fall of 9%, Europe too has fallen 12%, China down 22%. MENA region has fallen almost 16%. And following these sales that company has reported, Nuvama expects Q2 revenue to drop by 22% and EBITDA to fall by as much as 52%. What's the focus going forward for Tata Motors? It would be a phased restart of the operations by JLR, one engine plant that company is starting today, and it would be followed by car manufacturing plant. So more than sales, the focus would be on the restart of the production.
All right, that would be something that we will most definitely watch out for in Tata Motors. Sudarshan, I'm looking at Godrej Consumer as well. They too have reported their second quarter update. Now, a couple of things. There's a few positives and a few negatives. What is the biggest positive? That the standalone business will deliver mid-single-digit value growth, which is led by low single-digit underlying volume growth. But that's a lot better than, say, what the competitor Hindustan Unilever announced. Absolutely flat performance. GST rate reductions have led to some short-term adjustments across trade channels. Personal care will decline in low single digits. The negatives are in the international business. Indonesia continues to witness heightened competitive activity, so they see low single-digit decline in value growth out there. On a consolidated basis, their overall revenue grows in mid-single digit, but EBITDA declines in the quarter due to GST transition. So there is margin compression. So now this is the fourth straight quarter where there has been margins which are lower than street expectations. So as a result of which, you may see some profit taking on Godrej Consumer. The second half recovery is expected, but that's expected for everyone else. This quarter, not particularly good because of the weakness in Indonesia and margins.
All right, Mangalam, all through the day, we'll try to make you happy. But later this evening, I think there's a special plan for you. And for that, we're going to be getting Sonal as well. Sonal, what are the plans today? I believe, you have planned something really cool. I just saw a video that you put out, which Mangalam is quite pleased about, though he'll act like it's just another video. But all eyes on you, Sonal. The birthday surprise is what we're looking forward to. For the timing, tell us about the stocks you're tracking.
Since it's a surprise, I would keep quiet about that, Nigel. And as far as the top 10 is concerned, I have some real estate stocks on my radar. Definitely not gifting that for now. But let's start with Anant Raj, because sources are suggesting that the company is launching 1100 crore rupee QIP, some fundraise on the cards. The indicative price is 662 rupees per share, which is around 5% discount to the current market price as well. That would lead to an equity dilution of 4.62%. So watch out for that one. And quarter 2 updates coming in for Lodha. It was a decent number, but it's slower growth than previous quarters that the company has seen. Pre-sales up 7%, collections up 13%. First half of the sales have come in at 9,000 crore rupees, and the company says they are on track to achieve full year guidance of 21,000 crore rupees because they have significant launches planned in the second half as well. They've added one project in MMR with a gross development value of 2,300 crore rupees. So these are the two stocks on my radar.
Okay, all right, Sonal, thanks very much for that. Even Keystone would be in focus on account of their Q2 update. Pre-sales were up around 9%. But Mangalam, back to you. You're tracking a couple of other stocks.
Yep, let's start with Latravenues Tech, or Ixigo as we know it. If you look at the month-to-date chart of that stock, it's a big mover. In fact, so much so that the exchanges asked them about the volume activity as well. Now we know the reason why. The company says the board will meet on the 10th of October to consider fundraise via issuance of equities through either QIPs or some other equity issuance as well. But what's perplexing is, on the other hand, they've also said that they will acquire, the company itself and its affiliates will acquire shares from the secondary market at no defined time or price, and their overall holding will not exceed 16%. Remember, all the affiliates and owners of the company are classified as non-promoters, so that'll be very interesting to see how that pans out. I mean, in fact, if the company had to raise money, then the promoters or the affiliates themselves could have pumped in some money instead of buying it from the secondary market. So that's perplexing. After the kind of up move that we've seen, the stock may see a bit of green because of the support coming in from the promoters, but I don't rule out some profit taking on Latravenues Tech. But Container Corp, it's a positive development that has happened. They've signed an agreement with Ultratech Cement to transport bulk cement by using specialized tank containers. I would imagine it's incremental business for them and Ultratech as well, because they get smoother access to transport of their products. So a win-win, Container Corp in green. But let's go across to Vivek. He's got IRB Infra and Shelley Engineering. Vivek.
Well, that's right. Good morning. So, IRB Infra, the company has gone ahead and given the toll collection update as far as the month of September is concerned. The toll collections itself were up almost 11% at a little over 550 crore. The company says that the extended monsoon actually impacted traffic activity, and along with that, the GST reforms, they say, impacted traffic both in late September, and it caused temporary softness as far as goods movement is concerned. However, they say for the rest of the year, the outlook is quite bright, given the fact that festive season as well as GST 2.0 implementation is something that they believe will lead to a surge in traffic activity. The other stock on our radar was a sharp mover yesterday, Shelley Engineering Plastic. Like we mentioned, Lighthouse India Fund sold close to 3% equity. They held a little over 4% at the end of Q1. Among the top buyers were Motilal Oswal, Stallion Asset, and some of the other buyers included Aditya Birla AMC as well as ADIA, which is the Abu Dhabi Investment Authority Fund.
Okay, all right, Vivek. Thanks very much for that. Let's go across to Gaurav now. He's looking at a couple of banks. Gaurav, tell us more.
Well, as RBI has now come up with their draft guideline for ECL, which is expected credit loss. Now, as per the draft guideline, it is expected to be applicable from 1st April of FY27, and it will be glide path. The glide path is given till FY32. Now, let's understand what has changed quickly. First is that they have added new classification, which is stage 1, which will be as performing assets. Stage 2 is significant increase in credit risk, and stage 3 is somewhere where we will see NPAs. Now, earlier, let's not forget that currently, if we look at the status, we already have the standard and the NPA. We already used to cover SMA 0, 1 and 2, but the provisions were not given. But now, because of the stage 2, which is added as a new layer, there will be new provisions which will be needed to be added. Let's understand what the provisioning is going to be. They have proposed a regulatory floor for stage 1. It is going to be around 0.25 to 1.25. For stage 2, it is going to be 1.5 to 5%. And for stage 3, it is going to be anywhere between 25 to 100% based on the collaterals and the status of the loan. Let's also understand what brokerages are saying. As per Motilal Oswal, it is going to be positive for big banks like HDFC, ICICI and Axis Bank, because they have strong underwriting and they also have a secured heavy portfolio. At the same time, they see limited impact to PSBs because they already have strong asset qualities, and they are also mentioning that the banks with elevated unsecured MFI exposure is something that we should be looking out for, because they will need extra provisioning. Now, RBI has also come with the draft guidelines for risk weights, which is positive for affordable housing and also for SBI cards. So we will get on the details on that as well. But for now, these guidelines, and on back of that, we will be watching out on the entire space of banks and NBFCs today.
Okay, all right, Gaurav. Thanks very much for that. And on that note, it's a quick recap for all our top stocks that we're tracking this morning. Stocks with positive news flow are Titan, Anand Raj, Lodha Developers, Concor, Ixigo, IRB Infra, Shelly Engineering, Plastics and Banks, while stocks with negative news flow this morning include Tata Motors and Godrej Consumer. All right, but let's stick with stocks. Let's go across to Sudarshan now. He joins in with all of the brokerage calls of the day. Sudarshan, what are you watching?
So I have two important notes today. First one is on Canara Bank. UBS has initiated coverage with a buy call, and target is given of rupees 150 per share. It says it's one of the largest PSU banks which has delivered 14% loan growth over FY 22 to 25 and also has managed ROA of more than 1%. It is well placed to deliver steady loan growth, and that will be driven by first, easing sector headwinds, second, higher liquidity, and third is lower loan deposit ratio. Also, lower mix of unsecured loans will keep credit cost controlled for Canara Bank. As far as valuation is concerned, it also appears reasonable at current levels. Also, company has announced that there will be listing of 2 subsidiaries, and UBS believes that will also add to the target price of Canara Bank. Next note is on IGL. Yesterday, we would have seen that Sonal had reported about some gas sourcing norm change by Gujarat government, and on the back of that, Investec has come out with a note today. It has a buy call and target is given of rupees 250 per share. It says effective October 1, Gujarat government has revised tax structure on gas sales, and as per that, levy on interstate transactions reduced to 2% CST from earlier 15% VAT, and that will, because of that tax cut, input cost for IGL will come down and it will improve margin as well as profitability, and that will result in annual savings in the range of rupees 350 to 400 crore and will improve margin by rupees 1 to 1.50 per SCM, and EBITDA can see an increase in the range of 18 to 20%, and Investec projects earnings CAGR of 10% over FY 25-27. Also on the valuation front, it finds reasonable.
Okay, all right. Thanks a lot for that, sir. Well, we'll take a short break. On the other side, we'll connect with the management of V-Mart Retail. We'll discuss their Q2 business update. Stay with us.
Welcome back. You're watching us here on Bazaar Morning Call. Let's get our first corporate conversation going. Anand Agarwal, who's the CFO at V-Mart Retail, joins us now. The 3 important talking points that we have, obviously, this good second quarter business update that the company reported, festive season sales and demand ahead of Bihar elections. So all these factors what we're going to discuss. Anand, thank you so much for joining in. First, I have to tell you, in the first quarter, when your SSSG was 1%, you were quick enough to point out that ex-festive preponement SSSG was 5%. This time around, the SSSG is 11%. You did not tell us that was because of the preponement of Navratri. So when it's good, you don't tell us. When it's bad, you tell us X of that, it would have been that much. So tell us, let's start straight up. X of the Navratri preponement, what was the SSSG this time around and what's sustainable?
Manglam, this is the first time we are having this interaction in quarter 2. So this is the first opportunity I can have to tell you. But yes, I had in fact pointed out in my last quarter update as well that we will have an early Pujo this year. The festives are around 10 days to 15 days preponed this year. So we will have that impact going forward in quarter 2. And we might also have a bit of that impact in quarter 3 as well. I think X of Navratri, X of Durga Puja, I think the growth still has been good while we delivered a 22% overall sales growth. But if I, nullify the impact of the early Durga Puja and Navratri, the growth would have been around 16%.
All right, 16%, not particularly bad. Last time you joined us, you did say that this festive season would be 20% growth. So, point to point, including Pujo and Navratri and the Sera that just went by, this year, festive season versus last year, do you think it'll be over 20% that you had earlier estimated?
We're still, looking at around 17 to 20, 22, 23%. It will be in that range. Very difficult to quantify at this stage because as of now, weather is playing a bit of spoil sport. While the festive is in full swing, there's very good customer traction that we are able to see on the streets. GST tailwinds have been announced, so that is really helping in terms of consumer sentiment. But otherwise, I think, but for the, late monsoons or, rough weather especially in South India and parts of, East India, I think we still are guiding towards double digit, around 17 to 20, 22, 23% overall growth for the festive.
Okay. Anand, hi. Morning. Just wanted to narrow down on what you mentioned with regards to GST. You did mention that you are seeing good traction coming in on GST. Give us a sense in terms of when we could probably see it play out in terms of your numbers. Most of the companies say that you'll probably see it Q3 onwards. And if so, to what extent?
I believe the GST impact for value retailers like us will be very limited. We traditionally play in the average selling price field of around 300 to 500 rupees. Now that's an area where GST has had very limited impact, only in the input tax credit. The maximum impact it has had is in the price segment of 1000 rupee plus, where our presence is very, very limited. But what this allows us to do is that we can now experiment a bit more in expanding our range in the 1000 rupee plus segment, where the earlier GST rates were around 12% and now they have got reduced to 5%. Having said that, I think the immediate benefit that we are definitely able to see on the ground is that the consumer sentiment looks very much positive. While it's also a mix of the festive, it's also a mix of the good monsoons that we have had this year. So there is good, expectation all around that, things are going to be good. I think the biggest beneficiary for us in the long term is going to be, around in the higher price segment. But I think the impact of that might only come from, in the medium to long term, not in the immediate short term.
All right. Hi, Mr. Agarwal. We can solve that problem with regard to not getting an update because you're not joining us too often enough. So let's speak more often. That at the side, what about store addition for the year? I think you were talking about 60, 65 stores. Is that on course? And also tell us about payments. How is inventory days shaping up? If you could give us a broad sense.
So I think on the new store additions, we are pretty much on track on 65. We already opened 40 in H1 this year. So 25 were in the last quarter. And I think from whatever updates that I've got from the team, I think they're looking at very robust pipeline ahead. In fact, October should be a very blockbuster month in terms of store openings. So we are looking at a very good pipeline and probably might exceed a bit on the overall new store opening guidance. As far as the inventory goes, I think we've always upstocked for the festive season. So this is the peak of the the peakest part of the festive season. Puja has just gone by. Diwali is just about to begin, and you have Chhath followed by that, and then you also have a good marriage season. And then you also have a good, supposedly a good winters. So there's a lot lined up in quarter three. Quarter three is also our biggest quarter. So while we are very healthy on inventory, we're very comfortable on the inventory. But I think in terms of inventory days, probably quarter three, we should look at, around 90 days or so.
All right, 90 days would be an improvement from over 110 days that we have. But, just the SSSG, you said was 16% in the second quarter, ex of festive seasons, or rather sales value. Does a higher SSSG come at better margins because that increases store utilization, improves efficiencies? So do we see mid-teens sort of margins in the second, third quarter? And for the full year, what's your guidance? Last year was about what, 11.5%?
So definitely SSG is a very big driver of overall EBITDA growth. The bottom line has a huge leverage, operating leverage coming in if you have a good SSG. And I think the 11% SSG in this quarter will definitely help us, improve our bottom line. Quarter two normally is a small quarter, is always a loss-making quarter. So still the numbers are yet to be announced. So I can't really come on the numbers as yet. But I think on the overall full year basis, we should still see good amount of improvement for the full year because we're still looking at, mid to high single digit overall same store sales growth for the full year.
So Anand, if you had to just leave us with a broader trend in terms of what your exit rate would be for FY26 based on what you did in FY25, 17% growth is what you did in FY25 and your margins were at around 11.6%. Do you think you can significantly improve that? And what is the guidance that you can probably leave us with for the entire fiscal?
So as of now, Ekta, I'm definitely looking at improved growth, both in terms of SSG, also in terms of total sales growth, which was 17% last year. So we should definitely improve on that as well. And if both these things happen, I'm very, very confident that we should also be able to improve the EBITDA margin. Now, by how much is anybody's guess. As of now, I can't really guide on a number, but definitely we are looking at slightly improved, sales growth as well as EBITDA margins from last year for the full fiscal.
And the numbers for Unlimited and V-Mart have merged, right?
Yes, they've always merged. And in fact, Unlimited is now doing very well for us. And we are very, very optimistic on opening more number of new stores in South India under Unlimited. Because as that format has turned very profitable and it's now, it should be the future engine of growth for us.
All right, Anand, always a pleasure speaking with you. Good fun ribbing you every once in a while on the festive season, etc. as well. But irrespective of the shifts for on an annual basis, we wish you good growth, good margins from a larger standpoint because of Tier 2, Tier 3 India as well. Thank you so much for joining in. Have a good day ahead.
Thank you.
With that, let's move on. We have Devin Choksi of DR Choksi FinServe joining us now. Devin, the one common thread that we've gotten from all the consumer company updates so far is that metros are still not out of the woods, whereas there is a bit of a boom in Tier 2, Tier 3 and beyond. Would you bet on value retailers that cater to that area right now over and above consumer staples? Or would you, stay away from consumption?
Yeah, good morning. Well, not staying away from consumption for sure, because I think this is the time when probably we are likely to see the growth happening in the economy because of the higher disposable surplus. Yes, you are right. I think compared to metro, the smaller towns definitely are seeing the larger amount of growth because the availability of funds or the surplus in the hands, I think, is relatively higher, including one which is seen also from the collections of the SIPs from the Tier 2, Tier 3 towns. So obviously, higher amount of spending money, higher amount of saving money, both are available in the Tier 2, Tier 3 places. Remain confident about that particular proposition. However, I think the valuation matters. Today in the market, when we are seeing the oversupply of papers, at the same time, I think that people are more interested in flipping based on the IPOs that they are applying for. I think that the higher valuations are going to come in the way. And if my reading is right, probably I think we are going to see a larger amount of drag as far as the high value stocks are concerned, even though the fundamentals may not be bad. Till yesterday, I think these companies have been getting higher valuations. Today, they might probably see the resistance in getting the higher valuations. So I think I would be mindful about paying the value, the premium valuation to the companies.
Okay. Devin, hi. Welcome to the show. Morning. Well, just talking about consumption, what do you think of Titan as well as Godrej Consumers Q2 updates?
Yeah, good morning. Well, I think overall the update remains, I think, satisfactory, if I would say that way. However, again, I think the same situation, whether I think you want to buy at this valuation, they have been premium valuation, particularly Titan always remain, I think, a premium valuation company. And that limits the upside or the headroom, as we call it as, I think, for the investors. So to my mind, I think one will have to wait before buying a good quality business. If one gets at a quality valuation or rather bargain valuation, that would be, I think, more appropriate to buy into this company.
All right. What about Anand Raj, Deven? I'm not sure whether you tracked that one. They're looking to raise some money, close to around 1,000 crores from the markets. The stock has had a big run. And there's a lot of talk with regard to the data center play. Any view on this name?
No, Nigel, I haven't, I think, looked into detail, though I do understand, I think, the data center play, but frankly, I think I haven't looked into the business proposition on their side.
Okay, all right, no worries. What about real estate then on the whole? We have Keystone, that's Rustomji that came out with their update. Lodar as well came out with their update. And, we have interest rates that are falling here in India because of the RBI rate cuts. And, the hope is that the demand continues. What's your view?
So we remain selectively bullish about the prospects going forward for real estate. As you rightly mentioned, the cost of fund is coming down, which is helping. At the same time, I think higher amount of funds in the hands of individuals, basically, I think because of the tax saving, again resulting into the mass housing buying activity in a systematic manner. So this is one space where probably we are likely to see the continued growth. Seven, except in some pocket, I think you will see the oversupply situation in the interim period. And that's where I think you might see some impact as far as the results are concerned. But if one has to look at real estate a little bit more systematically and minutely, I think the luxury and the ultra-luxury segment is possibly likely to see a higher amount of growth. Because over there, the supply is relatively less. And at the same time, I think because of the higher amount of wealth generating proposition in the hands of family offices and individuals, you are probably going to see the larger amount of demand scenario for ultra and super ultra real estate properties. So we are basically more confident in that particular space vis-a-vis the mass housing and the premium housing space in the real estate.
Okay, well, you did mention the word luxury, Deven, so I'm going to catch on to that and ask you about Tata Motors. The stock hasn't done too much this year. It's down around 5 to 6% year to date. What's your sense in terms of what they announced? Obviously, this month they were impacted by, one-offs with regards to their sales figures. But what's your approach on the stock?
I think the worst is in the price as far as the company is concerned. They're taking all strategically right decisions. Demerging the commercial vehicle business from passenger vehicle business. JLR, of course, got impacted for the reason we know about. But to me, I think these are all some of the phases, I think, which will come and go. Fundamentals are not taken away by the strength, I think, that they have created. In my viewpoint, I think they have actually operationally strengthened themselves very significantly, both in commercial vehicle as well as in passenger vehicle. And given the kind of demand scenario that we are seeing, particularly for commercial vehicle now, I would like to think that the demerged company, Tata Motors, will relatively look much better going forward. So remain confident about the prospects going forward. Selective buy at a lower level is definitely a good strategy to follow in the future.
Okay, all right. That's on Tata Motors, Deven. But, there was another stock which I actually wanted to ask you about was Ixigo. Do you look at that? They're looking to probably get an investor on board. What's your sense on that particular one?
Not seen it at this company, honestly, so refrain from putting any comments.
All right, Deven, Vedanta, that's a stock that's going to be in focus, and I think you've been bullish on it. And, the stock in the last 1 year, it will appear that it's up only around 4-5% approximately. However, there's been a dividend of close to around 40 rupees. So put that together, actually, the stock has outperformed. Now, today, there's that crucial demerger hearing. And if it gets a green signal, probably there'll be some more value creation. What's your view on the stock? Given the kind of, we have seen what the promoters done over the last few years, and that's what makes, investors a little bit cautious. But otherwise, it appears valuations are okay. If there's going to be a melt-up in metals as well, the company stands to gain. And the demerger as well could be an additional fillip. Your view?
Absolutely, Nigel. I think this is where probably this company is taking corrective steps. Demerger is the way to go. I think the commodity, particularly metal commodities, ferrous as well as non-ferrous white metal, it's good data. I guess I think the scenario is looking upbeat and buoyant. In my viewpoint, I think you look at copper, you look at zinc, you look at silver. I believe that I think each of these commodities are showing relatively very, very strong signs of growth. And that's where I believe that I think this demerger will probably give better valuation to these companies. We remain bullish on the prospects going forward. So certainly, I think the demerger is the way to look at. Once it is getting implemented, where probably 26-27 financial year would be the better year for the entire companies which are demerged from this particular company.
All right, Devin, thank you so much for joining in and giving us your views on a whole host of stocks. Wish you a good day ahead. With that, we'll take a short break, another one on our show. On the other side, we'll tell you all the big volume buzzers that took place yesterday in trade and some technical trades coming in, the picks from Sudarshan Sukhani and Mitesh Thakkar. Stay with us.
Welcome back. Well, let's get some more stocks in focus today. Hormuz is now joining in. He has the big movers from yesterday, which saw heavy volumes and which would be in focus in today's trading session as well. Hormuz, over to you.
Morning, Ekta, and a lot of movers in the broader markets on very strong volumes as well. Let's start off with Indraprasth Medical, and it was the 20% upper circuit for the stock, the first time after 5 years that the stock saw a 20% circuit yesterday. The fifth straight day of gains now for the stock yesterday, and more than 60 lakh shares that changed hands in yesterday's trading session. The 20-day average here is just 2.5 lakh shares, and even for delivery as well as a pretty impressive delivery volume, almost 1/3 of the total traded volume was marked for delivery. Over 17 lakh shares. Here too, the 20-day average is just over a lakh, and as a result of that 20% circuit and this 5-day of gains, the stock has turned positive on a year-to-date basis. The railway stocks saw a bit of a spike towards the close of yesterday's trade after the announcements made by the cabinet with regards to some new projects. IRCON ended 7% higher. Over 1 crore shares changed hands yesterday. 40 lakh shares being the 20-day average. A similar trajectory for RVNL and IRFC as well. They are still close to their 20-day average, but still volumes being on the higher side, seeing a spike towards the close of trade. On the delivery front as well, 24 lakh shares of IRCON were marked for delivery, 20-day average being 10 lakh shares, and same is the case for RVNL and IRFC as well. They're closer to that 20-day average on the delivery front, but since the spike came in closer to closing, it will be interesting to see whether these names see any follow-up action in today's trading session. And the last one on the list today is RHI Magnesita, and that stock was up 10% as well in yesterday's session, but it was only the second instance in the last 11 trading sessions that the stock ended with gains. But take a look at the volumes yesterday. They were the highest on record. Not just that, they were the subtotal of the last 77 sessions put together for RHI Magnesita. Close to 4 crore shares changed hands in yesterday's trading session. The 20-day average here is only 1.5 lakh, and out of those quarter to 4 crore shares, close to 18 lakh shares were marked for delivery. The 20-day average here too is just 70,000. So moves on very strong volumes for RHI Magnesita and a lot of these broader market names.
All right, Hormuz, thanks a lot for that. We take a short break, come back. We have the pre-opening and trades from our technical experts on the other side. Also with us will be Gaurav Malhotra, who's the Executive Director at Axis Capital, for the discussion on India's telecom sector.
Welcome back. Well, we're getting pre-opened rates that will start trickling in just a bit. We'll wait for those rates actually to settle down. For the time being, let's welcome our technical experts. We have Mitesh Thakkar of Bonanza Portfolio, who joins us on the show. And we have Sudarshan Sukhani as well, of Technical Trends, who joins us. Hi, gentlemen. Good morning. Good to see you all in. We are on a bit of a winning streak, though yesterday we came off the highs of the day. Mitesh, you go first. What would you do? And at what level that bullish bias gets negated?
So, Nigel, good morning. The markets had a good rally of 4 days and slightly overbought. So I think profit booking and a pullback was quite expected. Also, 22,250 was a historical pivot. Kind of met that area and then have slightly slipped off. My sense is that I think, the market possibly could give you a pullback to about levels of around, I would say, 25,050 to about 25,000 zones. And that, if we don't break that, I think that would be a good entry point. So the idea is to buy on declines on the index, and stock-specific trading is obviously different.
Right, and Sudarshan, your calls on the index and individual stocks?
Yeah, good morning. Well, it's the same. It's very easy when the market is in a sustained trend, primarily in a sustained uptrend. The Nifty is in an uptrend. So far as it remains in this uptrend, there is only one trade, stay long. If you want to re-enter or if you don't have a position, buy on a minor dip. Don't expect big dips. Keep your stops at 24,900 and just be there for the ride on the upside.
Okay, all right. Midesh, your top picks?
Yeah. I would go with the mix of buys and sells today. Federal Bank is a buy with a stop at 196 for targets of 206. Buy on IGL, which had a good price and volume action. So buy on a mild decline. So if you get an intraday pullback to about 218, 217.5, buy with a stop at 212.5. Look for a target of 230. And on the selling side is Jindal Steel. It's trading near the support area, but the structure is weak. So if it breaks 1,028, which is about 5-6 points lower than where it closed, then sell with a stop at 1,042 for targets of 1,000, and Pidilite is a sell with a stop at 1,490 for targets of 1,430.
All right, a sell on Pidilite and buy on JSPL. With that, we'll do is we probably, all right, Sudarshan, your individual stock picks are left. What do you have?
Well, I have 4 buy ideas. IDFC First Bank is a buy with a stop under 70. Ashok Leyland is a buying opportunity with a stop under 135. NBCC is a buy with a stop under 110. And finally, Eternal, which is a buying opportunity with a stop under 335.
All right, gentlemen. Thanks very much for joining in and giving us all of those technical strategies. But let's shift focus onto the telecom sector. The Jio top subscriber additions in August have come out, but Bharti Airtel's market share saw a mild dip. To discuss this and more and the Voda Idea AGR case, we have with us Gaurav Malhotra, who's the Executive Director at Axis Capital, joining in. Gaurav, hi, welcome to the show. Well, let's start by talking about Voda Idea. Considering it's at an 8-month high, the stock surged in yesterday's trading session. It's gained around 17% this year. There's a lot of optimism that the UK Prime Minister is in Mumbai right now. So give us a sense in terms of how you're approaching Vodafone from these levels.
See, our published view on Vodafone is reduced, right? And on all the reasons that generally everyone knows of, right? That there are just too many imponderables around the AGR issue, the cash flow situation, etc. The fact that the debt has not been raised. It's now more than a year and a half since the equity fundraise had happened. So see, there are these pockets of bouts of excitement with Vodafone Idea, right? Around news flow of anything which happens around AGR. But, there are just too many variables. So ideally, we should just wait to see what actually happens, rather than get too excited on any of these news flows, because these news flows keep coming and going.
All right. Hi, Gaurav. Good morning. Good to see you. And Nigel on this side. If someone is tempted to play a Vodafone, would you advise them actually to play Indus Stars? The reason I say that is because if Vodafone survives, then they get their money. If Vodafone, gets taken over or something else happens, anyway, those stars will have to be taken over by someone. Your view on Indus Stars?
Yeah. So see, on Indus, we have an ad, and precisely on a couple of reasons. One is that obviously, the valuation is quite supportive. So while there are obviously issues or uncertainty around Vodafone, those are sort of getting reflected in the valuation. And second is that from a FCF yield perspective, the stock is quite attractive. Right. So in a way, yes, Indus is like a lower beta play on what happens with Vodafone. So yeah, if someone really wants to play, then maybe that Indus then becomes the better way to sort of play that.
What about Bharti Airtel? It's the leader and perhaps the only clean play in the telecom space right now, as against the other one being a conglomerate. It's lost a wee bit of market share. Again, nothing really to worry. It's a very transitory thing. Structurally, are you bullish on Bharti Airtel even at current valuations? Are there any risks here?
See, so we are quite positive on Bharti, right? This is one stock where you're getting a very good visibility of really good and healthy growth in the coming 2-3 years on the back of tariff hikes, premiumization, the shift, the FWA traction, etc. So we quite like the stock. Obviously, it has run up. The valuations are not cheap, right? Because if you look at it versus global averages versus its own history as well. But the way we are thinking about is that, look, like I said, from a earning visibility, it is good, right? It has started to increase the payout, right? Given the free cash flow generation. And that free cash flow generation is only going to keep increasing in the coming few years. So from that perspective, there are enough sort of triggers on Bharti for us to remain positive. The subscriber data, like you rightly said, is transitory, right? It comes and goes, and end of the day, what is more important for Bharti is how much of their own existing subscribers are sort of upgrading to 4G, right? Rather than, getting too fixated on what is the net addition of the subscriber. That's important, but the organic upgradation of 2G into 4G is also quite important from Bharti's perspective.
So apart from ARPU, what are the other metrics that you would track for this upgradation? Is there anything that is
data consumption per user data consumption that keeps moving up, right? So that tells you postpaid subscribers increasing, right, in a proportion that keeps moving up. Once a year during the annual report, the company also gives you some indication of Airtel Black, which is their converged offering, right, which they're quite focused on. So those are the 2-3 sort of variables one can sort of look at to see what's happening on the premiumization trends.
What about Jio? Strong market addition, market share. How is that placed in your pecking order?
So see, because Jio cannot be played in isolation, so it has to be played within Reliance. But from a results perspective, both Bharti and Jio will have roughly similar kind of results, right? They're sort of in the same boat, plus minus. So there's not really much to sort of pick one versus the other, especially when it comes to results and operating and financial performance.
All right. What about the ARPU hikes that you're working with for 26 and 27? Could you quantify it?
Yeah, so we are looking at around 10 to 12% hike in effect sometime between, say, December of this year and June of next year. The idea is twofold. One is that, look, if you see the quantum of hikes has been reducing with every subsequent hike in the last since 2019. But the transmission has moved up quite substantially. So the first hike had only, say, 50-60% of the hike transmitted into ARPU. The last hike had almost 90 to 100%. So these operators don't really need to take a large quantum of hike to reflect reasonably in their ARPU. And so hence we expect like a 10 to 12%. And even the timelines between hikes is sort of reducing. So the last hike, there was a 2.5 year gap. We expect it's going to be 1.5 to 2 years, and hence we are looking at December 26 to June 27 kind of a time frame.
All right, and just to wrap it up, back again to Jio, because in the annual general meeting there was this plan of separately listing Jio as well. So have you done any maths on what it could be valued at right now? And if Jio has to create value for shareholders by listing separately, then the pricing discipline and disruption in the industry would be a lot more smoother. So to that extent, that could be a positive for Bharti too. So valuation on Jio and the impact of its listing on the telecom tariff discipline.
So see, in our Reliance Industries SOTP, we value Jio roughly around $120 to $125 billion of equity value. So which is around 13.5, 14 times EV EBITDA, right? So it's sort of reasonably valued over there. And pricing discipline is there irrespective of whether a company is listing or not, right? You essentially have a situation here is there two large players who own roughly 40% of the market each. The third guy is relatively weak, so he would sort of follow any hikes. So I don't think listing itself is the only reason. The industry generally is sort of quite conducive. The industry environment is quite conducive for hikes in the coming years.
Okay. All right, Gaurav, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So it'll be interesting to see whether there's any kind of incremental buying which we could see for Vodafone. The India Mobile Congress also kicks off today. So that would be something else to watch out for in the telecom space. But let's get back to our 9-10 calls. We have Sudarshan joining in as well as Mitesh. Sudarshan, you go first. What's your 9-10 call?
It's Ashok Leyland. Buy Ashok Leyland with a stop under 135.
Okay. And Mitesh?
Yes, I will go with a buy call as well. Buy on Federal Bank for targets of 206.
Okay. All right, guys. Thanks very much for joining in. But before we get to the market open, we have Gaurav who's joining back to tell us about the RBI credit provisioning guidelines which have come out and what impact that could have on banks. And they've been focused today. Gaurav, over to you.
Well, yes. RBI has now released draft guidelines for ECL as well as risk weight. So first, let's understand what they have changed in ECL guidelines. First is that they will be applicable from 1st April 2027 and the transition is allowed till FY32. So that is a positive thing for banks. Other than that, now they have added new classifications, which is stage 1, stage 2 and stage 3. Specifically, if I have to talk about stage 2, it is basically the loans which are past due more than 60 days. So this is something that they have added as a cushion and there will be some provisioning which is required. So let's understand how the provisioning calculation is going to be. First is that the bank will have to consider probability of default, loss given default and exposure as default for the calculation, and at the same time they have proposed regulatory stage 1 ECL requirement of 0.25 to 1.25%. For stage 2, it is expected to be at 1.5 to 5%, and for stage 3, it will be anywhere between 25 to 100%. Now, as per Motilal Oswal, they believe that the top private sector banks are going to be the key beneficiaries like HDFC Bank, ICICI Bank and Axis Bank because they have a large secured book. At the same time, they see limited impact on PSBs and bank with elevated unsecured and MFI exposure. Now, there we may see higher provisioning which will be required. But remember, it will be applicable from FY27. So we will be watching out on banks like IndusInd Bank, Bandhan Bank and RBL, how the commentary is going to be and how the transition is going to be from these banks. From the credit risk capital point of view, let's also understand what key changes they have made. First is that the LTV based risk weights for housing loans, now they have reduced the risk weights sharply to 20 to 40% and they have increased the risk weights for commercial real estate to 150%. So it will be positive for real estate players specifically who are in the affordable segment, and it will restrain some capital flow to the leverage developers. Second big change is that in the personal loan and credit card segment, although they have continued their 125% of risk weight, they have lowered the risk weight to transactor category. Now, remember, this will be positive for card players because they have 55 to 65% of the overall receivables, which is calculated as transactors. So definitely that is going to be a positive change for these companies as well going ahead.
All right, take that point, Gaurav. Thanks a lot for that. Meanwhile, if you're looking at a couple of these pre-open rates, Dabur is down about 1.5%. Godrej Consumer is down 1%. Now, Godrej Consumer reported their second quarter updates yesterday, and it was a mixed bag, more down than up. What was good was that their, India business has delivered mid-single-digit value growth, led by low single-digit underlying volume growth, which is better than what HUL has reported. But what's not particularly good is weakness in their international business continues. So we have Indonesia that witnessed heightened competitive activity. They see low double-digit decline in values out there, and EBITDA will decline for the quarter due to the GST transition. On a consolidated basis, the business reports a mid-single-digit revenue growth. While they're confident of recovery in the second half, the multiple quarters of weakness in margins is something that the street is not particularly liking, though there is positivity in the second half, so we probably see the stock finding some buyers at lower level. It'll be very interesting to see how Dabur trades in today's trading session, given their update was a lot better than all the others that have reported. And there goes the opening bell, absolutely flat for the frontline index, just as indicated by the GIFT Nifty. But the one that's taking the top honors today is Titan, up 3%. A decent heady growth of almost 20% in their consumer businesses on their high base. The street likes that. It's up around 2.93% right now. On the way down, we have seen some decline in FMCG names. So Tata Consumers opened lower, Nestle's opened lower. We've seen some weakness in Tech M and a couple of these other IT names as well. So the heat map comes up for you. It's even Stevens for now, but the only FMCG stock which is not falling is ITC, and the consumer stock which is not falling is Titan. But by and large, a lot of the Tata Group stocks, the tech stocks, and a couple of these banks as well, the likes of ICICI Bank and Sun Pharma, are lower. The broader markets, we are seeing some traction in Container Corp, tie-up with Ultratech, and IRB Infra continues to do well as well. We will be joined by the management shortly. And we have Godrej Consumer, which is down about 1.8% too. Nigel.
Well, that's right, Mangalam. From the broader markets, actually a few stocks that are really moving around. ITI, that stock is up close to around 4%, one of the top volume movers in today's trading session. So big move is what we're seeing out there. Inox Green as well is up close to around 4%. Indraprastha Medical, yesterday the stock was buzzing. Today the stock goes on to build those gains. Little Travelers Tech, 2.5% higher. You know, there could possibly be some more buying from some of the investors as per what they put out on the exchanges. So that stock up and about in today's trading session. Metals are bouncing back. Yesterday, in fact, we did see some kind of selling on that. Nalco is up close to around 1.5%. On the flip side, Anand Raj and raising money at a discount. So that stock's down close to around 3%. Canara Bank is down close to around 1% or thereabouts. So a flattish to a mildly positive start is what we're seeing on the index itself. A few more names. Zuari Industries, that stock's volumes are pretty okay. More than 1 lakh shares in the first 2 minutes. Stocks up close to around 6%. You have JCorp as well. That's up close to around 4.5%. Had seen a sharp correction from the recent peak, but that's bouncing back in today's trading session. But undoubtedly, the one that's twinkling today is Titan. You talk about their size and they're growing on that sort of a base. The street likes it. Valuations not cheap, never have been. Yet the stock is bouncing up 3.5 to 4%.
Yes, absolutely. But just want to point out that a couple of these other stocks from the broader market, say an Anand Raj is down around 3% on the back of that QIP news. Shelly Engineering, which was in focus, is down around 2.6% as well at this point in time. Canara Bank, there was a note, I think, which came out on Canara Bank, so that stock is in focus as well in the red. On the upside, just pull up Keystone for you, because Keystone is not doing too badly. It's just about higher by around 0.8%. So just showing some amount of momentum at this point, and maybe Macrotech should come up for you as well. That's Lodha Developers, where the pre-sales were up around 7%. So Lodha just about higher by around 0.17%. But as of now, this is what is taking place in terms of the markets. It's quite quiet at this point. It's an absolutely flat and quiet start. We have the Nifty, which is just about higher by around 12 odd points. The mid-cap index, which is absolutely flat, and the advanced decline ratio as of now on the advancing side. Remember that yesterday we closed on the declining side. So let's see how that trends. As of now, it currently stands at around 1,200 stocks advancing to around 960 stocks declining on the National Stock Exchange.
Suddenly, we've seen some pickup in the IT pack once again. So Infosys is up 1%. We have some recovery from the lows on TCS as well. And Shopper Stop, that's the one that is, seeing a lot of volume traction today. Up around 5.5% for that stock. And alongside that, Yatra Online is the other one which is doing well. We've been speaking about Travelers Tech, but Yatra Online also has put on decent gains in this week itself, up around 13.5%. Perfect time to welcome Lawrence Belanco of CLSA, who joins us now as our market master. Thanks a lot, Lawrence, for joining in. We're not talking about equities right now. Let's start with gold. You saw a breakout possibility all the way up to $4,000 to $4,100. We're at the lower end of your projected upper range. Do you think gold has the potential to go much higher from here on as well? Maybe beyond 4,100? Are you revising your targets here?
Good morning. So no revision of the targets. In fact, what we've seen last week is the advance in gold is now taking price action to a 20% premium to the 200-day moving average. And if we look at the behavior that we've seen historically when gold gets to that 20% premium, we typically get a blow-off move. And what I mean by that, we get this accelerated move higher. So we still think we can push towards that 4,100 area. But what is likely to follow that kind of blow-off move is a multi-month consolidation. So the last time we saw this 20% premium to the 200-day moving average was in April. That accelerated peak then resulted in a 5-month consolidation pattern for gold. So I think tactically what we'd be looking for here is a push closer to that 4,100 area. You take some profits and look for a consolidation pattern to develop. From a longer term side, we think that consolidation pattern is another sort of stair step in the longer term uptrend in gold, but shorter term, take some profits around 4,100 and look for a consolidation to develop.
Lawrence, hi. Welcome to the show. Just a quick follow-up on that. In the near term, based on, say, momentum, how are you placed on silver then, vis-a-vis gold?
Yes, so silver, a bit of a catch-up trade, but again, I think the $50 area getting back to the 2011 highs is likely to cause some hesitation. So a little bit more upside into that $50 area, but like gold, that 4,100 should prove to cause some hesitation and a bit of a pullback. But ultimately, silver should clear that $50 area, and like gold, continue that uptrend. But tactically, this is not the time, we think, to be adding new positions. It's time to manage some risk and look for a digestion and consolidation phase before you re-enter for a new breakout campaign, basically.
All right. Hi, Lawrence. Good to see you in. Lawrence, what about the Nifty? I recall you telling us that if 24,000 is protected on the downside, which we've gone very close to, in the last few months itself, but we have bounced off that. If that is the case, we should be bracing for fresh all-time highs. So maybe 26,300 by the end of this year. Do you think in the next 3 months, the Nifty moves to fresh all-time high?
Well, the positive is that we keep on respecting that 24,000 area. So actually the range is from 24,000 to 24,300. It includes a 200-day moving average. It includes the original February-April double bottom pattern. So that's the significance of this 24,000 to 24,300 area. And you're quite right, we've tested this area on 3 separate occasions that we have bounced off it. So basically keeps the February-April base in place, which still gives us an upside target of 26,300. We now, in global equity markets, move into a more positive sort of seasonal aspect. And our base case on global markets is there's a greater risk for a continuation of the uptrend in a melt-up scenario. And even though the Nifty's been a relative outperformer, particularly if you look at versus regional markets, we think in absolute terms, we can see a move towards that 26,300 area.
26,300. So you are fairly bullish out here, and your base case is that the global markets will continue their uptrend. On the Indian market itself, what is it that you think will lead this rally? We have, the Nifty Bank. I'm not sure whether you looked at the chart out there. Reliance and the IT pack. What's your call on all of these?
Well, the positive on the banks is that, we have seen weakness up the market back to 24,000. We saw it on the Nifty Banks Index, but we held above the 200-day and the lower boundary of its trading range. And we started to see a number of the state banks, in fact, actually hold those supports and start a recovery. We also, on the private bank side, saw HDFC hold above its 200-day moving average. So the banks holding above those key support area, I think that's what's aided the market's stability above that 24,000 area. It's the autos where we've really seen strong upside momentum, as well as the metals where we've seen momentum to the upside. So we think autos can be one of the sort of key drivers to the upside, and in fact see some rotation into laggards like Bazaar Auto is sort of one stock that we've highlighted. It has lagged the likes of Maruti Suzuki, TVSL and Asia Motors, and we think there's a bit of a catch-up trade to be had on that side, and the metal side too, with aluminium looking like we can break through the 26,700 area, sorry, 2,670 area, that we can see further upside in the metal space too into year-end.
Okay. Lawrence, just going back to your Nifty target of 26,300, when do you expect to achieve that by? What's your timeline for it?
So we're hoping that we get there by the end of this year with the positive seasonals into the first quarter of 2026.
And which sector is probably going to, lead the way for this?
So like I said earlier, I think the autos and the metals in particular are 2 key sectors where we have strong momentum coming through. And the other key point is that we've seen the bank sector stabilize here. So that's, giving just support or a foundation for the market to work its way towards that 26,300 area.
All right, Lawrence, besides equities, we track 2 very, very important data points. One is on the dollar index, which has been very, very weak. It's down close to 10% the last year or so from the recent peak. And that bodes well. Unfortunately, for the Indian markets, we've underperformed. Do you think the dollar index continues to weaken from here? If yes, where does that one head? And the blessing from an India market perspective is that Brent crude prices continue to remain at very subdued levels, even when we had geopolitical issues. So where is that one headed?
Yeah, so clear message for us from the US dollar index perspective is that the break below the 99 to 100 area confirmed a major market top, we think, for the dollar that had been in a bull run for over 14 years. So we think the break below the 100 area on the dollar index confirmed a major market top. And we still see another 9 to 10% downside because the measured move from the 2022-2025 topping pattern is down to the 89 to 90 area. So that's where we still see the downside risk. I think it is positive for emerging markets in general, as well as the rest of the world, particularly if you look at it versus US equities, which have been the big relative outperformer and absolute outperformer over the past 15 years. So a bit of a shift, we think, driven by that weaker setup in the dollar index. As far as Brent goes, it's been one of the worst performing macro markets that we track, down over 9%. And we do see $70 as the key resistance zone capping the upside. So it's quite interesting if you look at the Brent oil charts going back to late 22, is that 70 had become a support area until the breakdown that we saw earlier this year, and now 70's turned into that resistance zone. So we've basically seen a lower trading range develop for Brent, where the $58 to $60 ends the bottom end of the trading range and $70 to $71 the top end. So more of a consolidation pattern and trading range on the Brent side. But it does seem to have a pretty good floor at the $58 to $60 area.
Okay.
Since we have you with us, do you have a call on the US markets as well from here on? Because the S&P 500 and all the other indices are virtually at record highs. Yesterday, they saw some bit of profit taking. Do you think the up move for the US markets continues as well, as is your base case?
Yes, so I can't make the argument that rest of world markets or emerging markets can go up without the S&P at least holding above its 50-day moving average. What we don't have for the US market is any measured targets or upside targets. It's already been a V-shaped recovery off the April lows, but the clear support area has been provided by the 50-day moving average since May. So as long as we stay above the 50-day moving average, we think this uptrend in the S&P is intact, and we should give benefit of doubt to the upside. But like I said earlier, it doesn't give us a new measured targets on the upside.
Okay. Lawrence, before we let you go, you gave us a target for the Nifty, but the longer-term target for the Nifty was around 37,000. Is that still intact?
Yeah, absolutely. So we're still, the bullish setup on the longer term side is still very much intact. And yeah, what we've been frustrated in this sort of trading range, and even if we get to 26,300, that's essentially a test of last year's highs. This price action that we've seen through 2025 on the longer term chart is probably going to be looking at a holding pattern or consolidation pattern within that longer term uptrend. The positive is, once we ultimately break through that 26,300, yeah, we're still looking at that 37 to 40,000 on the longer term bull market scenario for the local market. Yep.
Define that timeline for us. Longer term, 37,000 would be by when? Same time next year?
No, I wish it was as soon as that. But we basically looked at these structural bull markets in India lasting roughly a decade. So obviously taking the COVID lows at 37 to 40,000 is an end of this decade. So we're talking about 2029 to 2030 as the time horizon.
All right. So on the Nifty, 26,300 could be the target. On gold, what's the target? Just to revise what we've just spoken about.
Yeah, so our target range is 4,000 to 4,100, and we think we're in this blow-off move, so there's a likelihood of getting to the upper boundary of that range being 4,100.
Okay, and silver, we have seen $50, 1980, 2001, and 2025. This time around, if it breaks that $50 mark, where is it headed?
That setup doesn't give me a new measured target, but we do expect with gold having a consolidation pattern below 4,100 and silver below 50, we'll again expect new all-time highs for both metals.
Okay. All right. Lawrence, it's always good hearing your thoughts. You're still sounding quite optimistic about the prospects of the Indian market. And what bodes well for us is that you continue to see weakness on crude as well as on the dollar index. Thanks a lot for joining in. Wishing you a good day ahead, and we chat up with you rather soon. Well, we're talking a lot about gold, right? And one company that came out with a good operational update is Titan. Manglam, we have discussed this in the past, right? Valuations aside, on that sort of a base when you grow, the street likes it. And you hit the nail on the head earlier this morning.
Yep, the street likes Titan for the simple reason that even on that base they are growing. Yes, there is competition, but competition is against the unorganized space. So long as everyone in the organized space continues to gain market share, Titan stands to benefit out there as well. Surging gold prices have driven substantial ticket size increase. That's what's reflected in a near 19% growth. But, the decline in buyers has been marginal. So that's a positive. Apart from that, remember the second quarter last year had a high base as well because we had just come out of that customs duty cut, so there was some pre-buying out there. But this year, that was offset by a earlier festive season. So all these factors working for Titan. The key internals out there, studded jewelry, that grew a lot better than plain gold jewelry, obviously because plain gold jewelry became a lot expensive as well. So people played plain gold via gold coins as they played the investment theme out there. But apart from jewelry, which is nearly 90-95% of their revenues and entirely their profits, the important part is other categories did not underperform either. We had watches that grew about 12%, eye care grew by about 9%, CaratLane itself grew by 30%, and the international business, the company has been betting on, going global from here on as well. US, the business doubled, the international business grew by 86%, and all their other emerging businesses as well. Barring Tenera, which is their ethnic wear business, the women's bags up 90%, fragrances up 48%. That led to a 37% jump in their emerging businesses. These account for smaller parts of their overall pie. So the bigger part is growing well, while the others are also doing their part. And that reflects in the kind of stock price up move that we're seeing on Titan. But we do have Ria joining in on Anant Raj. That's a stock which is lower in an otherwise bubbly market. Ria.
Well, yes, Mangalam, Anantraj is lower by by over 3% today in trade, and sources have said that the company has launched its QIP worth around 1,100 crores. Now, the floor price has been set at around rupees 695 per share, and the indicative issue price is 662 per share, which is a discount of around 4.86% to yesterday's closing price. The equity dilution is seen at 4.62% for this issue, and as I said, the stock is lower by around 3% today.
Okay, all right, Ria. Thanks very much for that. So that stock, Anant Raj, is down around 3% Well, for the markets, it's a little quiet, you'd have to say, in terms of the start. The Nifty is just about higher by around 0.22% at this point. We have the mid-cap index, which is absolutely flat. But let's shift focus now to the railway sector. The cabinet, in fact, has gone ahead and greenlit 4 major railway projects worth around 24,634 crores. The approved projects are aimed at enhancing capacity and connectivity across Maharashtra, Madhya Pradesh, Gujarat and Chhattisgarh. Additionally, the brewing discussion now is around what's the centre's increased consumption focus means for India's infrastructure and capex needs. Will capex, in fact, take a backseat, or can both go hand in hand, aiding the India growth story? To take this discussion forward, we have with us Nalan Gupta, who's the Managing Director at J. Kumar Infra Projects, and Umesh Chaudhary, who's the Vice Chairman and MD at Titagarh Rail System. Gentlemen, thank you very much for joining in. Mr. Chaudhary, I'm going to kick off the conversation with you, and these projects worth around 24,600 crores, which has got the cabinet nod. Just tell us, it's across 4 states. How does it filter down? What is the process henceforth? When would, bidding start, execution begin? And what would it mean in terms of an opportunity for a company such as yours?
Good morning. Always a pleasure being with you. So, the project that has been sanctioned is under the Prime Minister Gati Shakti program, which effectively aims at debottlenecking the existing infrastructure or enhancing the capacity by debottlenecking the existing infrastructure. So, if you really look at the overall railway network in the country, there are patches within the network which actually become the bottleneck and are impacting the overall growth of the railway and kind of hindering the achievement target of 3 billion tons of freight movement and enhancing the passenger movement of the railways. So all these kind of infrastructure projects, like the one that has been sanctioned by the Union Cabinet, is going towards making sure that those bottlenecks are completely removed. And the effect of this is not going to be only for this patch, but it is going to be an overall increase in the capacity of both freight and passenger loading for the railways.
So what does that mean?
In terms of the timelines, that's not something that has been clearly specified, but Considering the pace at which the current government works, I'm sure that it's going to be very, very fast.
So what does that mean for orders coming in for rolling stock as a result of that? If infra worries are eased out, then one assumes that rolling stock orders will increase as well. In your case, from the government, from private entities, what's the likelihood here?
Absolutely. You see, if you really kind of break this down, the infrastructure that gets created, the track that gets laid down is like creating capacity. And in order to utilize that capacity, more rolling stock has to be purchased. So whether it is purchased by private sector or by the railways, the effect is that it does generate business for companies like us.
Okay. All right. Good morning, gentlemen, and good to see you in. Mr. Chaudhary, just comment on this then. For this year, what kind of wagon production are you looking at? The first 4 months, if I got it correctly, you did around 2,460 wagons approximately. And I think for the year, you were gunning for around 9,200 wagons. Is that target on? That means that you'll have to do close to 950 to 980 wagons for the remainder of this year on a monthly basis.
So as far as our capacity is concerned, we've already we've got a capacity to do 1,000 wagons a month. So capacity is not a challenge for us. The first 4 months of this financial year, the wheel sets, as we have discussed in the past, also was a problem. The sole supplier of wheel sets, which is Rail Wheel Factory Bangalore, had some production issues. That has gotten normalized from the month of August onwards. And now we are getting regular supplies of wheel sets. To be able to achieve similar to the numbers that we produced last year should not be a problem, around 9,500 wagons for the entire year. Our own wheel plant is also coming into production. The joint venture that we have with Ramakrishna Forging is also coming into production between January and March of 2026. So that is going to take care of this problem, that perennial problem of wheel sets that keep on coming back in some form or the other. We feel that is going to be a permanent resolution to that.
Okay. Well, Mr. Gupta, just getting you into this conversation, you're in the entire Mumbai infra upgrade scenario. So just give us a sense in terms of the projects, the metro projects. What is on-ground tendering like in terms of activity at this point? And how active is it in terms of bidding and execution?
Well, so I would say good morning, everyone, firstly. And I think the infrastructure work that we can see all around has been magnificent. And the metro projects are on track. And there is a lot of pressure to complete these projects well within the time frame. And every year there is a set kilometer requirement that has been set by the Chief Minister, which has to be completed every year. And that's how we can see every time the trial runs going on. And there are new tenders which are very soon, which will be published. And that would be Metro Line 10, which is from Gaimukh to Dahisar, and Metro Line 13. So these projects of metro are very soon, which are going to be published because they are in advanced stage. And that would connect the entire, I would say, a circle all around the Mumbai, which is because we have Metro Line 4, we have Metro Line 9 and 7. So this would be a connectivity between Metro Line 4 and 9.
I'm particularly happy, Mr. Gupta, that Metro Line 3 is opening today after many years of conversations that we've had with you on our channel. Hopefully the infrastructure woes of Mumbai get, eased a little with the Metro Line 3 opening. But speaking about metros itself and the layout that the government has on rail infra, do you believe that you will participate in tenders outside of that as well? Maybe not in and around Mumbai, but Maharashtra and some of the national projects?
Well, so I think you would appreciate that J. Kumar, we are already operational in 7 states. And we are doing Bombay, Pune, Surat, we are doing Delhi, we are doing Bangalore. So metro projects, J. Kumar has been active all across the country. And for us, Maharashtra is not only a state where we focus. As far as metro is concerned, we are open to bidding in all the states. And so, of course, we'll be very keen in, bagging orders all across the country as and when the opportunity comes.
Okay. All right. Mr. Chaudhary, coming across to you then, if you could help us out with the passenger rail system, what is the targets out there? I think in the coming years, you're looking at ramping it up. If I got it correctly, last year the delivery was close to around 12 coaches. You could correct me on that number. This year you're looking at it going up phenomenally, I think 120. So give us the path on the PRS side of your business.
Absolutely. So, on a lighter note, the harder Mr. Gupta works, the better it is for us because he creates the traction.
It's good for everyone, sir. Let me tell you, it's very, very good for all of us. The
harder both of you all work, the better it is for everyone else.
So Mr. Gupta and Mr. Chaudhary, we are cheering for y'all. Y'all got the cheerleaders, but your shareholders would like to know what about the numbers? You're making our lives quite simple. The other day I went from Lower Parel to BKC in a matter of, I think, 12 to around 15 minutes. So happy with the metro rail. But Mr. Chaudhary, you wanted to give us those numbers. Please go ahead.
So you're absolutely right. Last year we did about just 12 wagons, 12 coaches, metro coaches, which were primarily supplied to Pune. This year we are targeting around 120 cars, ramping up to 240 the next year, and so on. So the growth trajectory that we have for the coaches is quite substantial. We should be able to get to 300 coaches of metro coaches alone by 2028. And then further, depending upon the market, expand it further. Our overall capacity, which we are planning for the metro coaches, is even larger than that.
Okay.
In terms of the projects executed, we did the Pune Metro, of course, the Bangalore. The Patna Metro, which was inaugurated day before yesterday, was with our train. We are going to deliver the Ahmedabad Metro this year. The Surat Metro will be this financial year. And of course, Mumbai Line 6 is what we've already got. So there are a number of projects that on the metro side we are doing. And then there is the Vande Bharat. So we already have the order for 80 Vande Bharat trains. That's 1,280 cars. And that will start delivery in FY27 and then ramp up. So there also we will have a capacity of doing up to 350 cars a year.
So Mr. Chaudhary,
something where our total capacity was, or total production was 12 cars, including Vande Bharat and Metro in FY25. We are looking at ramping it up to close to 700 cars or 650, 700 cars in 28-29. So it's actually a big part of our growth story.
Sure. Mr. Chaudhary, so then, just narrowing down on that fact that, or on that assumption or that fear that maybe the government is probably going to slow down a little bit on capex because of their focus on consumption, that won't hold true considering the kind of capex and the kind of execution pace that you all are seeing, or is there any kind of fear that one has when it comes to this?
No, I don't think so. I believe that both have to coexist because, the infrastructure, this government has been very, very clear on its policy. Prime Minister Modi, right? I was just reading that he spent 24 years now in public service and public life as a chief minister and a prime minister. So all through the journey of 24 years, I think his focus has been on the infrastructure, and that's never taken a backseat. So, in a country like India, which has so much of diversity, the masses is important, but infrastructure can never take a backseat.
Okay. All right. Mr. Chaudhary, coming back to you. Mr. Gupta, I think for this year, you were guiding for revenue of around 6,500, 6,600 with mid-teens margins. Do you stick to that and also help us out with the order inflow?
Well, so I would say there is the top line that we have targeted of 6,500 to 6,600 is well on track. And we should be surely able to achieve this with the bottom lines of 14 to 15% EBITDA margin because that comes with the existing orders. So we are very much confident, and we are till Q2, we have been doing in line with the target that we have set for our company. So I would say absolutely there is no worries to think about the achievement of it. We have surely achieved that. And for the order book inflow, there has not been a new order inflow as of now for this year because I think the type of margins that we look at and the type of projects that we are looking at. But in this coming 6 months, we should be surely able to bag orders worth around 5,000 to 6,000 crores, which we are about to bid. And there are certain projects that we have already bidded as well. So we are very confident of bagging those orders.
Got that. So 5,000 to 6,000 crore worth order inflow in the remainder of this year. Nothing has come by in the first half, but you are confident of 6,000, 6,500 crore revenue with mid-teen margins. Mr. Chaudhary, back to you as well. What has been the order inflow in the second quarter so far? What is the order book that you stand at? And what is expected in the second half of this year from both PRS as well as rolling stock coming in from, freight?
Sure. So we've in the last few months, we've got the Mumbai Line 6. We've got some other orders, both private sector and some railway wagon orders as well. So the overall order book, including our share of the joint venture, last as we announced, was about 27,000 crores. And we have participated in several tenders. Some of them we are already in a good position. So we would of course announce about them once they materialize. But we see the pipeline quite healthy. Of course, we are waiting for the big wagon tender that should come out hopefully in the next 2-3 quarters. We do have orders for the next about 4-5 quarters for the wagon. For the passenger rail system, of course, we have order book visibility even for the next 3-4 years.
And what's the size of the wagon order which is likely in the next 2-3 quarters that you're saying? And how much are you likely to win from that?
The tender should come out in the next 2 to 3 quarters, as we understand that.
What is the quantum, sir? What is the size of it? And normally, what is your hit ratio?
We do not know the size of it because these things are they're going to get clear only at the time of the tender, etc. But normally, our market share has been between 20 to 23%. So we expect to maintain around the same market share.
Okay. All right, Mr. Chaudhary as well as Mr. Gupta. Thanks very much for joining in and speaking with us. So no slowdown in terms of any kind of order inflow from the government when it comes to capex and consumption pretty much going hand in hand in terms of a theme right now. We'll take a short break, but after the break, we're going to shift focus to the ongoing tensions at the Tata Group. Stay tuned.
Welcome back. Well, Home Minister Amit Shah as well as Finance Minister Nirmala Sitharaman met Tata Trust Chairman Noel Tata, Tata Sons Chairman Mr. Chandrasekharan as well as the trustees. Now, sources close to the Tata Group told CNBC-TV18. Shireen joins us to fill us in with the latest on this big developing story. Shireen?
Well, good morning. Yes, crucial development that took place last night, as we've been reporting, on account of the escalation of tensions within the Tata Trust. Some members of the Tata Trust reached out to the government and sought a meeting, and that meeting took place last night with the Home Minister Amit Shah, as well as the Finance Minister Nirmala Sitharaman in attendance. From the Tata Trust side, there was the Chairman of the Tata Trust, Noel Tata. There was also Venu Srinivasan, who is another trustee, as well as Darius Khambata, who is a trustee, and also the Chairman of Tata Sons, N. Chandrasekharan. Now, what we are given to understand is that both sides have a difference of opinion on certain decisions that have been taken, certain decisions that involve Section 121. Section 121A was brought in post the Cyrus Bisri battle, and that gives the Tata Trust the oversight on certain decisions, especially when it comes to capital allocation and so on and so forth. So the point of difference, the trigger for this current escalation stems from a few decisions that involve Section 121A. What we're also given to understand is that while the trustees close to the chairman, Noel Tata, believe that there is an attempt to usurp power, that there is an attempt to undermine his leadership and quote-unquote stage a coup almost. The other side, which is closer to Meli Mistry, Pramit Zaveri, etc., point out that that is not necessarily the case, that there has been a difference of opinion on certain matters, but there is no attempt to usurp power as is being claimed and as is being projected. Now, remember, there is a crucial board meeting on the 10th of October. My sources tell me that that board meeting has nothing to do with these issues. This is not going to be on the agenda. What is on the agenda of that meeting on the 10th of October are decisions related to the philanthropic activities, which is really at the heart of what the Tata Trust do. So it will involve about 1,500 crore rupees of what the philanthropic arm of the Tata Trust, will put their money to work towards. So that is what is slated and scheduled to be taken up as far as the October 10th board meeting is concerned. So if there was any expectation that that board meeting on the 10th of October could lead to any kind of a decision on this current escalation, that is not the case, is what I'm given to understand. So this is a developing story, but my sense is that post that meeting with the government yesterday, attempts will be made to try and de-escalate, attempts will be made for both sides to try and reach out and have a conversation and a dialogue around the points of difference, but that is where things currently stand.
All right, Shireen, thanks a lot for that. Thank you for bringing us up to speed with the developments out there. Like you said, it's a developing story, and everyone will hope that both sides do indeed de-escalate. To take this conversation further, we do have with us Sriram Subramanian, who's the founder and managing director at InGovern, Hetal Dalal, who's the president and COO at IIAS, and Gopal Jain, who's a senior lawyer at the Supreme Court, joining in as well. Hetal, coming to you first, from a shareholder standpoint, how important is this de-escalation, and what do you think would be the best course of action from here on from, purely a shareholder's perspective? What would be a good outcome as per you?
So good morning, everyone, and thank you for having me on the show. A quick disclosure, Tata Investment Corporation is one of IIS's shareholders. I think the issue really is, from a shareholder perspective at this stage, there is limited impact, right? The whole issue seems to be at the level of the trust. It's not as much impacted Tata Sons yet, except for that whole board nomination seat, which is currently board nominee seat, which is currently vacant. But this entire issue seems to be at the trust level. I think there needs to be some kind of a governing structure which they put in place, which allows them a very structured decision-making process. See, you've seen this in the past also. When Ratan Tata came in also, there were these leadership challenges. Noel Tata has come in. There is again a new leadership challenge. Whether we agree to it or not, there is a certain sort of unrest in the trust group, and that cannot bode well. They need to have a solution to it. They've met the government, the Home Minister and the Finance Minister yesterday, according to sort of reports, and I suspect that there will be some kind of de-escalation. But my sense is that these sort of periodic outbursts of concerns over governance at the unlisted company end, first at some years ago it was at Tata Sons, and now we're seeing it at the trust level, doesn't bode well for the group and the brand. I think the Tata Group has a significant, the Tata brand does carry a lot of trust as far as its stakeholders are concerned. And some of these things I think are best nipped in the bud rather than having these escalate. So I think they've got to put a governance structure around it.
Okay, well, let's just take that point forward. Gopal, if you could just come into this conversation, because the meeting with the high-level government officials have taken place. So based on that, what do you think could possibly be an outcome to repair or to smoothen out the rift?
I think the fact that as sources report there was a high-level meeting shows the attempt is to resolve and nip in the bud and not let things escalate. So I think the key thing at the moment is dialogue, discussion, and perhaps intervention which will smoothen ruffled feathers, because it's far too important, the House of Tatas. It also stands for India, and literally, if I can use the word trust, Tata Trust, known for governance, sort of pride of place as far as global entities are concerned. So I think the key thing at the moment should be to find via media a meeting point so that things don't escalate any further. I think that should be the first thing. Cooling embers is what is required at the moment.
Okay. Is there any sort of legal route which this might take, Gopal?
I think that's too premature at the moment. So when there are conversations which are happening and some kind of intervention, I think best is to see where that leads to rather than jump the gun.
All right. Good morning, lady as well as gentlemen. Thanks a lot for joining in. Mr. Subramaniam, let me get you into the conversation then. What do you think, could be a logical solution that comes out of this? From a shareholder's perspective, it makes shareholders very, very nervous. Though it may not have a big impact, but you want things to be stable at the top. So your comment on it.
Firstly, I don't think it will have
longer-term impact on the shareholders of the operating entities. As of now, there is no sign that they need to be worried or they need to be nervous at all. Secondly, the operating structure between the Tata Trust, there is an understanding. This was tested at the time Cyrus Mistry was removed. Subsequently, the operating structure was questioned. So I think there is already a template in place between the Tata Trust and the Tata Sons. There is the nominations of 2 directors that Tata Trust will sort of have on the Tata Sons. The others will be independent directors and executive directors. All these are already put in the arrangement between Tata Trust and Tata Sons. So it is quite sort of this one that the moment Noel Tata has stepped in, the other directors at Tata, the trustees at Tata Trust should sort of do what is known, what you term as a coup. I wouldn't go to that extent of calling it a coup. I think there will be disagreements over whether the minutes should be ratified by them, whether they should be involved in key decisions, etc. All these are already, I think, would be there in the articles, would be there in the this one between the Trust and Tata Sons. Whether it is only related to decisions taken at Tata Trust or whether it impacts even Tata Sons, etc., needs to be seen. But I think all these are in paper already laid out.
All right, they're all in paper already. So let's pose this question to both Hetal as well as Gopal. Now, Hetal, coming to you first. While everyone hopes for de-escalation, everyone believes that maybe whatever happens will be in the best interest of shareholders right now. What are the risks out here? The risk as one sees, is prolonging of this risk, of this rift, and no real, resolution here. What is the other one? If you could tell us from a shareholder standpoint, and Mr. Jain, from a legal standpoint, what are the extremities here from a risk standpoint? Hetal, go first.
Okay. So, look, I think currently the issues at the trust level, if it starts impacting Tata Sons, I think that's where maybe there's a certain degree of worry. But as far as the listed companies are concerned, they have their own operating structures, they have their own boards, and they have their own governance. So as long as you have, Chandra at the leadership and at the helm of Tata Sons, who is the representative in most of the larger Tata Group companies, I think from a shareholder perspective, you would still be fine. I think the risk that at a very extreme level you would hopefully not is that the government actually begins to intervene, and I think that is completely avoidable. If you looked at the 1956 Companies Act, at some point in time they had a regulation or a law which said that if you're a trust which owns equity in a company, then it's the public trustee or the Government of India body which is going to vote your shares. And I think while that was repealed in 2000, that's a very, very extreme version of what can really happen, and it's completely avoidable. So I think it's best that they sort it out within themselves, and more importantly, put a mechanism in place to avoid these issues cropping up periodically going forward.
Okay. Well, I just wanted to just get that point across to Sriram about this possible governance risk that has come up. Do you think that it's probably going to delay decisions at the top and maybe impact functioning?
I don't think it will impact the functioning of Tata Sons. It will definitely not impact the functioning of the operating companies which are listed and unlisted operating companies. Probably to some extent the decisions at Tata Trust could take a while to sort of be taken, especially if there are decisions of strategic nature, of utilization of capital, etc., of any directors which are up for reappointment, etc. So one of the contentious issues, at least reported in media, seems to be appointment of directors on the board of Tata Sons itself, whether that should be just within the control of the NRC of Tata Sons or whether it should be also ratified by Tata Trust. So all these, I think there are already templates in place. I would think they just need to amicably discuss why there is a need for change, if at all some trustees are asking for change, and then resolve it. There will be differences. There will be, I would think, these are gentlemen of good stature and repute and experience. I hope they see a merit and they work towards an amicable solution.
Ethan, in your sense, if in case, like a Tata Sons was listed, do you think a lot of these issues would probably be solved because of increased transparency?
Look, there are enough listed companies where there's intra-promoter group infighting, right? So I don't know whether listing is going to solve the disagreements. I certainly hope they put a structure around it. But look, Tata Group has a lot of issues to deal with. One is this whole listing piece. They've got these IPOs coming up. There's capital allocation. There's Air India. So I think the focus, what it does for a lot of the group is just distracts its focus when all this infighting happens. And therefore, they need to sort it down so that the business actually, the entire focus of the board and the trustees is on getting the business up and running and, sort out some of these sort of larger issues.
Okay, all right. Thanks a lot for joining in and giving us your take on this ongoing saga. Hopefully, we get a logical solution that comes about. Thanks a lot for joining in. Well, a quick check on the markets before we slip into that break. The Nifty, well, it's come off a little bit from the top. That 25,200 mark appears to be a bit of a resistance zone. I think in the last hour or so, there were a couple of stocks actually that did slip from the day's top. Asian Paints has come down a little bit. You had Bharti Airtel as well that was holding in the green. I think that as well has slipped a little bit in the last few minutes or so. But what's done well, I think, is SBI. That stock's got into a good rhythm. That's moving up as we speak. Slip into the break. On the other side, we have Siddharth Rai, who's waiting for us. He'll give us a technical check. Stay with us.
Welcome back. Well, absolutely quiet for the markets. We have the mid-cap index, which is just about lower by around 44 odd points. We have the advanced decline ratio, however, which is on the positive side. So let's see how that moves as the day progresses. The Nifty currently up around 55 odd points. Just want to point out that Titan now is at the high point of the day. So that stock is up around 4.4% as we speak. But a couple of other stocks from the broader market seem to be showing some amount of momentum. Maybe Brightcom can come up for you. It's around a 15 rupee stock, but it's up 14% at this point, and a large amount of volumes which are traded on that one. And even stocks such as Mangalore Chemicals and Fertilizers is showing some amount of momentum. That stock is up around 2.5%. But let's get Siddharth Rai Mangala, who's a senior research analyst at Stockbox Technologies, for a technical check. Siddharth, hi, welcome to the show. What are you tracking in terms of the key indices?
Hi, Ekta. Good morning. Thank you for having me on the show. See, if we talk about Nifty, Ekta, the up move that we have seen building up over the past 4 days, it's been rather interesting because if we look at it carefully, though primarily the up move has been driven by the banking sector, but looking at it carefully shows us that almost every day, Ekta, a good supporting role was played by a different major sector. On the first day, it was pharmas, then next day it was metals, and then IT and autos also started contributing to this rally, which tells me that this up move this time is here to stay. And we won't be seeing too many dips or corrective moves, or at least over the next few days. Yes, the index can take a breather for a while because this up move has almost been one way. But I think eventually Nifty is going to move towards 25,450, 25,500, those big marks in the very short term, probably by this weekly expiry itself. So the momentum is clearly bullish, and our view should be bullish. We will not be seeing too many dips or big corrective moves from here.
Okay, and stocks?
Yes, definitely. See, Ekta, the two stocks both are showing very good momentum. The first one is National Aluminium. See, we've seen a very good momentum building up from the metal space over the past 2 weeks, and especially National Aluminium has shown some very good moves. Even today, there's a very good breakout. This move can carry the stock towards 230, 235 marks. So this can be bought right now. The spot is around 224-ish. It can be bought. The stop loss will be at 219. And our targets being, the first target is 232, second target being 236. The second stock is Ashok Leyland. Again, the auto space has shown a very good momentum. It's showing really good strength. And for Ashok Leyland, 140 was a very important mark. 2 days ago, the stock went below that mark, but very quickly it has managed to come back above it. So the next important level here will be 150, where the stock can move towards in the next few days. So Ashok Leyland can also be bought. Right now, the spot is around 141.5. The stop loss will be at 138. And as I said, the first target will be 150. The second target being 153.
Okay, all right, Siddharth, we're going to let you go on that note. Thanks very much for joining in and taking us through all of those technical picks. We need to take a short break now. But on the other side, our special segment, It's the Economy. Lata speaks to the MFIN head Alok Mishra and to Jinay Gala of India Ratings on whether the MFI default issues have ebbed.